Good day all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, and we're at the 15th of December, 2021. Well, what a crazy day. The Fed made its moves. I'm going to show you what they did here. You can read it. I'll do a little bit of talking. Let me first say, we're going to have a webinar on Thursday. I open it at 12:15. It starts at 12:30 promptly. If you didn't get your invite or you forgot to fill it out, just take your cursor, move it up anywhere to the top. An icon will appear. That's your form. Fill it out. I open at 12:15. We finish at 12:40. So it's 20 minutes long. Make the time. I don't post it anywhere. I don't think it's too hard for you to make 20 minutes to get that and see it and ask all the questions you want of me at that point. You can even write them ahead of time, which I've had people doing, and I'll be answering those questions. Are the first ones I'll get to. So the Fed's tapering. They're taking $30 billion now. They're going from 15 to 30. Their dot plot moved. It'll be 2 to 3 rate hikes somewhere in 2022, maybe another 3 in 2023. Remember, it's the best guess, and that changes. Why does it change? Because COVID is a moving target. Right now, the Omicron's better. I tried to get my wife to take her third shot. We can't get in anywhere for 10 days. So when they tell you can go to a drugstore, just walk in, no, you can't. Not at least the Walgreens in my neighborhood, and I'll use the name, CVS we went to, and of course the person giving the shots, they had the day off today. Not fun. It's very difficult to get it done. Should be way easier than that. That's the dot plots. It was a unanimous vote. When you look at what full employment is, what they're looking for, what is the Fed worried about in the curve yield, well, in my full research, I write about that tonight, but let me just tell you. The Fed can't define yet what full research is. Full employment. They're guessing 3.5%. When asked the specific factors to determine that, no answer, because it's a moving target. I'm not knocking it. I understand what they're saying. But when you say, well, if this is this percent and this is this percent, and that's going to give you what you call that, it's much more. And Fed Chair said that today. So inflation is the enemy. So what happened today? And this is a seismic shift, a watershed event. You hear that term, watershed event. The Fed shifted formally from saying it's helping the economy to now it's reining in the economy. It's fighting inflation. It's not worried about employment. He said as much when asked about does he think the labor market is hot? No, it's tight, but it does mean that wages are hot at this point. And at this point, they're not keeping up with inflation. I think we'd all agree with that if you looked at CPI, PPI. Seismic shift. And when you see those seismic shifts, pay attention to them. Write it down for yourself, because these things happen with the Fed and they don't change unless some other event like a pandemic comes about and changes it. This could be a 5-year deal. This could be a 10-year. I don't know. But it's a seismic shift, period. Okay. So I'm going to let that ring because we're talking so much. In Tesla, the market dropping down, trying to fill this gap. It doesn't have to fill the gap. It had to work at filling the gap, and that's exactly what is taking place. It's working at filling the gap. To fill it, you had to get to 890, 96. You got to 928. You filled in from that 950 area. I'm more than happy with that. What did the market do? We have an outside day up. You'll know, quote unquote, to a degree, if today's low is taken out on Thursday or Friday in Tesla, I think you'll then make that run to that $9 level. If it's not, follow me. You're under key moving averages. You have big support at 872, the 100-day average. Where is the Bollinger Band? Right here. So the market's been slip sliding on for 4 sessions, and it popped itself up with an outside day up. Now, as you know, I'm creating a course for you on outside days. And I don't know that it'll be done at the Christmas time or not, but it'll be out at the worst, the very beginning of the year. Not going to miss anything. And I think it's going to teach you an awful lot when you see these events. So now with that, you look at the momentum. The momentum is down, not embedded. You have an oversold market filling a gap, outside day up until today's low is taken out. I think you put a little bit of fear into those that are short. They might have been late to the party to come out. That's all I'm saying. In Apple, very important day yesterday. You lost the embedded reading. Now, in embedded reading, and that course you can take right now, it's on the website, occurs when you have 3 days in a row over an 80 level, which you had. If you lose the embedded reading with any reading under 79, out you go. The only time you can get it back is the very next day, and the market has to pop and keep going. Market opened steady, and today it took later because of the Fed, but I give it that benefit always. You just caught the bears. So unless and until this red line, which is now back to 83, goes back and closes under 79, the bulls are going to be aggressive, and they're going to probably eye this 181.55. Lose that reading, and then I think you go back to the 18-day average. Bear trap. So you have two new words from me. Watershed event, bear trap that has just happened. AMC. Well, you're getting a bounce, oversold. I think the pros have taken their money off the table after you got here. I think they took it off the table. If they sold into this rally, this was the next spot for the market. By the way, there's a big important number happening. The 18-day average of closes is tomorrow likely to cross under the 100, another bear factor in that market. In ARC, you made another run for the lower band, couldn't quite get there. Like Apple, different formation in the chart, an outside day. Okay, not the same against an uptrend where you lost it and coming back, but very close to a lower Bollinger Band. It might be time for more of a bounce. That's all that I'm saying. I think that's all that I'm saying. Okay, still a bearish market. Give the market a little room to breathe. It acts to me like it wants to bounce a little. In the industrial sector, all kinds of reasons that we had talked about. Now, we had talked right here. If the market drops, the first support's the 100-day average of closes in green. If it drops more, then this becomes the next support, 102.22, the 200-day. And if it rallies from here, the resistance is back at the 18-day average. I think the pros will want to sell it with stops back over 105.57. That's what happened today. Not an outside day up. We'll see what happens through that. XSD, the semiconductor. How many of you raised your hand get my morning spider ETF? And what did Ira say on this? I said, I think all the pros are out of this. I don't think they want any part of the short side beyond that. That's what in my subscriber paid videos I was saying. Said, folks, it was this and socks. I was saying, I don't think you want to play that anymore that way. That was, to me, the end of that run. Doesn't mean it's good yet. That was the end of that part of the bear run. Stinky. That's what I've been calling in my subscriber video. Cannabis stock. It stinks. It's been embedded. Where's my target? My target's the lower Bollinger Band. It's what I said this morning to my paid subscribers. It's what I'm telling you. I can prove what I said, and bingo, I feel pretty good about all that. I'm not bullish. I'm waiting for more of a rally. I think the market's still a short sale on the rallies. In the home sector, well, all you really did is you had a correction in an overbought territory. You fell back to the 18-day average. If you're trying to play it on a day like today, second-guessing what the Fed's going to do, the reaction to it and all, you're out of your mind. And that's what happened to you today. You probably lost your mind on a trade like that. There's nothing to do. There's times where you keep your hands in your pocket. Energy sector. Okay, you got down to the Bollinger Band. You missed it by 14 cents. You could still hit it, but you're not trending. You got a lower low, higher high. So that's the zone that I think the pros are looking at. And if they're going to support the market, I think it'll be against that. I didn't say buy it. I think if they're going to try to support it. EEM, where do you cover shorts? First challenge of a Bollinger Band. You're not embedded. That's what I think happened today. Gold. Gold rescued itself, but it's still got miserable resistance. I mean, a lot of it. 166.87 to 167.31, the 18 and the 100-day average. To blow through this, just go through it. Give yourself a close 168, 169, and you're going to get people going, my gosh, the watershed event. The Fed's fighting inflation. It's for real, and gold might respond. Maybe. It has been a child that belongs outside. It doesn't listen. I hope it eventually does. It's fun to trade gold when it's right. In the gold miners, you've been with me for a while, I pray. You see the market coming down. What number do you think I would tell you if you're short, and there's plenty of reasons here to have been short? Goodbye. So long. Adios. Copper. They beat the heck out of copper this morning. I want you to look at this. Whoa. You took it down to 34.69. The Bollinger Band, 34.71. You're back up on the close to 35.70. Again, in unison. If you haven't taken the Bollinger Band course, get your doctorate in it. I'm thinking of creating a certificate where you get the Ira doctorate. And I send it on to you because it is something to learn, and you're going to be able to apply it to any type of chart. I don't care what the chart is. If you have a chart and you can get the components that make up the slow stochastic and the Bollinger Band, you got it. That's simple. I admit, my numbers in my slow stochastic is different than yours. I modified mine a long time ago, as John Bollinger did. I went to his interview a month ago from the London Technical Society. I believe that was the name of it. And he did just what I knew he did. He has a way. I used the same thing he did to a large degree. There's a better way to use it than the traditional way. We both did it. Subscribe to my services, paid subscriber. I'll tell you what it is. Simple. TLT, lower highs, but holding that number. Was today enough of a watershed event to be bearish? Yes. Until the market takes out 151.31. You have lower highs. You already have lower low from here. You're under the 18-day average. You got to take that number out to thwart the idea of me being short. Otherwise, 147.89 could be the next downside target in the market. And last, in the euro, the lower Bollinger Band number is 104.37. What was today's low? I'm laughing. 104.40. Okay. The pros, I think, are out of the market. Here's what I think tomorrow's going to be. I think you have to tune in to me first thing in the morning, because here's what I do. The first thing I'm going to be doing, and a lot of you buy what's called my combo package, where you get the mixture of the futures and the ETF. Why? So many spiders and ETFs are made up of the futures markets. What do you think you're doing in DIA, QQQ? I can go on and on with them. They're looking at what the futures are doing. It's one after the other. So I covered that first. Tonight's the yin-yang impact. We saw what the Fed did. We have to see now what Japan, other Asian countries want to do. Then it moves to Europe. What do they think of what the U.S. did and how Asia reacted to it? And then we come in and see if the game's the same or changing on you. Crucial day tomorrow. So I'll cover that first in the futures at 5:40 in the morning. Cover all these markets, make it easy to get around. On the ETFs, 40 charts also. I start recording typically at 9 o'clock. Why? I want the first part of the day, the first 15 minutes or so, the algorithms to get themselves in the market, overnight money that's got to be placed. Then you have a series of reports that typically come out and culminate by 9 o'clock a.m. Central Time. I want those. I want them to have impacted the market. Now I have nothing left after that to hurt the market but the technical action. So I'm recording. Then I'm putting that right in your hands. You have a whole game plan for it. 2 videos. Each, by the way, have on the very bottom of a scroll bar on the website. You pull from section to section. It lights up and it tells you exactly where you're at. Pretty interesting. You get all this for $16.90, the equivalent of 48 videos, average length 20 minutes apiece. What do you have to lose? $16? Too much for you? Then why are you trading? Go to our website, under the word research, everything's laid out. And again, live webinar tomorrow. If you haven't signed up, just take your cursor, bring it up to the top. You'll see an icon pop up here. Click on it and sign up. I'm Ira. You have a great day. See you tomorrow.